Welcome, everyone. Today, we embark on a journey through the intricate landscape of the digital asset world. In the rapidly evolving world of finance, a new kind of war is brewing, one that transcends borders and traditional currencies. This is the great digital asset war, where nation-states are fiercely competing to amass as many digital assets and the corresponding infrastructure as possible. This war isn't fought with weapons or armies, but through strategic investments, policy changes, and technological advancements. At the heart of this conflict lies Bitcoin, the first and most prominent cryptocurrency. Only those who pay close attention to the Bitcoin market, like the most dedicated crypto enthusiasts, can truly grasp the magnitude of this global race. The stakes are incredibly high, as countries recognize the potential of digital assets to redefine economic power. For the average person, this might seem like a distant or irrelevant topic, but the reality is that the outcome of this digital asset war could have profound implications for the global economy and individual financial futures. As we urge you to watch the video and stay informed, remember that by the time most people realize what's happening, it may already be too late to make life-changing decisions in the cryptocurrency space. The US government's strategy regarding Bitcoin is a topic of immense interest and speculation. The United States government has quietly become the largest geopolitical holder of Bitcoin, with over 200,000 Bitcoins under its control. This fact is not widely known, even among those who are aware of the government's involvement in the cryptocurrency space. The US government's Bitcoin holdings are a result of various asset seizures, legal actions, and strategic acquisitions over the years. As of now, these holdings are valued at approximately $12 billion, making the US a significant player in the global Bitcoin market. However, the government's future plans for these assets remain shrouded in mystery. Speculation abounds about whether the US will choose to hold on to this vast reserve, potentially adding to it, or if it will begin to sell off portions of its Bitcoin, perhaps to fund other initiatives or to stabilize its economic standing. Selling such a large amount of Bitcoin could have a profound impact on the market, potentially driving prices down, at least temporarily. On the other hand, holding and increasing these reserves could signal a long-term commitment to Bitcoin as a strategic asset, much like gold reserves. This ambiguity leaves many in the crypto community anxiously watching for any signs or announcements that might hint at the government's next move. Former President Donald Trump has made it clear that, if re-elected, he intends to take a very different approach to the US government's Bitcoin holdings compared to his predecessors. Trump has criticized past administrations for violating a cardinal rule cherished by Bitcoin enthusiasts: never sell your Bitcoin. Instead, Trump has proposed that under his administration, the US would not only retain its current Bitcoin holdings, but would also seek to acquire more. This strategy would align the US government with the principles of many in the crypto community who view Bitcoin as a long-term store of value, impervious to inflation and central bank policies. Trump's approach could mark a significant shift in how the US government interacts with digital assets, potentially setting a precedent for future administrations. His stance also highlights the growing importance of Bitcoin in political discourse, as it becomes a point of contention and strategy in the race for the presidency. If Trump's plan were to be implemented, it could have wide-reaching implications for the global Bitcoin market, reinforcing the US's position as a leader in digital asset accumulation. Norway, a country known for its vast natural resources and wealth, is emerging as a significant player in the Bitcoin market. The Norwegian central bank, Norges Bank, has taken a strategic approach to Bitcoin by investing in MicroStrategy, a company with a substantial Bitcoin reserve. By owning over 1.1 million shares of MicroStrategy, Norway has effectively gained indirect exposure to Bitcoin, leveraging the company's large holdings of the cryptocurrency. This method is akin to purchasing a Bitcoin ETF, allowing the Norwegian central bank to benefit from Bitcoin's potential upside without directly holding the cryptocurrency. Additionally, Norway's sovereign wealth fund, one of the largest in the world, has been gradually increasing its Bitcoin holdings. The fund's exposure to Bitcoin has grown through various investments, including stakes in companies heavily involved in the crypto space. This deliberate strategy reflects a broader acceptance of Bitcoin as a legitimate and valuable asset within diversified investment portfolios. As global financial systems evolve, Norway's approach may serve as a model for other countries looking to incorporate digital assets into their economic strategies. The Norwegian government's actions signify a recognition of Bitcoin's potential to play a critical role in the future of finance, beyond just a speculative asset. Norway's decision to include Bitcoin as part of its national investment strategy highlights a broader trend of integrating digital assets into diversified portfolios. Unlike individual investors, who may be driven by personal beliefs or speculative motives, institutional investors like central banks and sovereign wealth funds operate based on best practices and long-term strategies. The inclusion of Bitcoin in such portfolios is not merely a reflection of belief in its potential, but also a recognition of its growing significance in the global financial ecosystem. As traditional assets like stocks, bonds, and commodities face increasing volatility and uncertainty, Bitcoin and other cryptocurrencies offer a new avenue for diversification. The rationale behind this shift is simple. By holding a diversified portfolio that includes a mix of traditional and digital assets, investors can potentially reduce risk and enhance returns. For Norway, and indeed for any country or institution considering similar strategies, the move towards Bitcoin is a calculated one, rooted in the evolving understanding of digital assets as part of the future financial landscape. As more countries follow suit, Bitcoin's role as a fundamental component in investment strategies is likely to become even more pronounced. In a significant move that underscores Russia's ambitions in the digital asset space, President Vladimir Putin has signed a new law regulating cryptocurrency mining within the country. This legislation marks a major step forward in Russia's efforts to capitalize on the growing digital asset economy, positioning itself as a key player in this emerging field. The law, which was recently passed by Russia's lower house of parliament, the State Duma, provides a clear legal framework for cryptocurrency mining, an industry that has been growing rapidly in Russia due to the country's abundant energy resources. Under the new regulations, only Russian legal entities and individual entrepreneurs registered with the government will be allowed to engage in large-scale crypto mining operations. This is a significant development, as it brings much-needed clarity and structure to an industry that has operated in a legal grey area for years. Additionally, the law includes provisions for regulating mining pools and mining infrastructure operators, ensuring that these activities are conducted within a legal framework. This move is seen as part of a broader strategy by Russia to harness the potential of digital assets while maintaining control over the industry. Russia's new crypto regulations could have far-reaching implications for the global digital asset market. By formalizing and regulating the industry, Russia is signaling its intention to become a significant player in the global crypto economy. This could lead to increased competition among countries to attract crypto mining operations, particularly in regions with abundant energy resources. Moreover, Russia's move could encourage other countries to adopt similar regulations, leading to a more standardized and regulated global crypto market. However, there are also potential risks. For instance, the centralization of mining operations within government-registered entities could stifle innovation and limit opportunities for smaller players. Additionally, there is the potential for geopolitical tensions to spill over into the crypto space, particularly if countries begin to view digital assets as a strategic resource. Despite these challenges, Russia's new regulations represent a significant step forward for the crypto industry and could pave the way for further growth and development in the years to come. As the political landscape in the United States continues to evolve, there is growing speculation about Vice President Kamala Harris's stance on cryptocurrency and digital assets. Given the increasing importance of these topics in both domestic and international finance, Harris's position could have significant implications for the future of US crypto policy. Some political analysts believe that Harris may adopt a more thoughtful and nuanced approach to digital assets than the current administration, particularly as she looks to differentiate herself from President Joe Biden's more cautious stance. This speculation is fueled in part by the competitive nature of US politics, where candidates are constantly looking for ways to appeal to a broader base of voters. With Donald Trump having already expressed strong support for Bitcoin and other digital assets, Harris may feel pressure to offer her own vision for the future of cryptocurrency in the United States. However, it remains to be seen whether she will embrace the full potential of digital assets or adopt a more measured approach, balancing innovation with regulation. While speculation about Kamala Harris's potential support for cryptocurrency is intriguing, what will ultimately matter most is the level of detail and specificity in her policy proposals. General statements of support for digital assets may be encouraging, but they are unlikely to satisfy the growing number of voters and industry stakeholders who are looking for clear and actionable plans. For example, Harris's stance on the self-custody of digital assets, a key issue for many in the crypto community, could provide important insights into her broader approach to financial innovation and personal financial sovereignty. Similarly, her views on the leadership of the Securities and Exchange Commission, particularly whether she would support the continuation of Gary Gensler as SEC chair, will be closely scrutinized. Gensler has been a controversial figure in the crypto world, known for his tough stance on regulating digital assets. Harris's position on this issue could signal her approach to balancing regulation with the need to foster innovation. As the 2024 presidential election approaches, the specifics of Harris's crypto policy will likely become a focal point of discussion, with implications for both the industry and the broader economy. Iran's crypto challenges. Iran, a country with a complex relationship with cryptocurrency, has taken a harsh stance against illegal crypto mining. The Iranian government recently announced a new policy offering a $20 bounty to citizens who report unauthorized crypto mining operations. This move is part of a broader effort to control the use of the country's energy resources and prevent the strain on its electricity grid, which has been exacerbated by the proliferation of unlicensed mining operations. Iran's government has long recognized the potential of cryptocurrency as a means of circumventing international sanctions and accessing global markets. However, the widespread and often unregulated nature of crypto mining has created significant challenges, particularly in terms of energy consumption. By incentivizing citizens to report illegal mining activities, the government hopes to reduce the number of unregistered miners and bring the industry under tighter control. This crackdown highlights the ongoing struggle within Iran to balance the benefits of cryptocurrency with the need to maintain order and stability within its borders. In addition to the challenges posed by illegal crypto mining, Iran has also been grappling with significant security issues within its crypto industry. Recently, an Iranian crypto exchange reportedly leaked the Know Your Customer data of 230,000 users, raising serious concerns about data privacy and security. This breach has further complicated the already fraught relationship between the Iranian government and the crypto industry. To make matters worse, an Iranian-backed hacker group is reportedly demanding a ransom of 80 Bitcoin in an anti-Israel ransom note, adding a geopolitical dimension to the country's crypto woes. These incidents underscore the risks associated with the rapid growth of the crypto industry in countries with weak regulatory frameworks and limited infrastructure. For Iran, these challenges are compounded by its international isolation and the ongoing pressure of economic sanctions. As the country continues to navigate these complex issues, the future of its crypto industry remains uncertain, with significant implications for both domestic stability and international relations. El Salvador's Bitcoin Vision A. Bitcoin City Development. El Salvador, under the leadership of President Nayib Bukele, has made headlines around the world for its bold embrace of Bitcoin as a national currency. One of the most ambitious aspects of this strategy is the development of Bitcoin City, a visionary project that aims to create a tax-free city funded entirely by Bitcoin mining. This initiative, first announced in November 2021, has attracted significant attention and investment, positioning El Salvador as a global leader in the adoption of cryptocurrency. Recently, the government announced a massive $1.6 billion investment from a Turkish holding company to kickstart the development of Bitcoin City. This investment, which will focus on 2 of El Salvador's seaports, marks the largest private investment in the country's history. The government has described Bitcoin City as a futuristic urban center powered by geothermal energy from nearby volcanoes, which will be used to mine Bitcoin. This innovative approach is intended to demonstrate the potential of Bitcoin as a driver of economic development and energy innovation. If successful, Bitcoin City could serve as a model for other countries looking to integrate cryptocurrency into their economic strategies. B. Strategic partnerships and long-term vision. The partnership between El Salvador and the Turkish holding company represents a significant milestone in the country's journey towards becoming a Bitcoin-centric economy. The deal, which will see the Turkish company and the El Salvadoran government jointly operate the seaports for the next 50 years, underscores the long-term vision behind the Bitcoin City project. By leveraging strategic partnerships with international investors, El Salvador aims to build a robust and sustainable economic infrastructure that can support its ambitious plans. The government's commitment to adding 1 Bitcoin to its national reserves every day further reinforces its dedication to integrating Bitcoin into the fabric of its economy. Currently, El Salvador holds 5,840 Bitcoin, valued at around $345 million, a significant amount for a small country. This continuous accumulation of Bitcoin is not just a financial strategy, but also a statement of confidence in the future of digital assets. As the country moves forward with its plans, the success or failure of Bitcoin City will be closely watched by governments and investors around the world, potentially influencing global attitudes towards cryptocurrency adoption. 7. Middle Eastern countries and Bitcoin. In a region known for its wealth and strategic investments, several Middle Eastern countries are reportedly preparing to make significant announcements regarding their Bitcoin and cryptocurrency holdings. Although not yet public knowledge, these nations, among the richest in the world, are believed to be quietly accumulating substantial amounts of Bitcoin. Countries like Saudi Arabia, Dubai, and others in the Gulf region have a history of investing in precious metals like gold as a hedge against economic uncertainty. Now it appears that they are adding Bitcoin to their portfolios as a modern equivalent, recognizing its potential as a store of value and a hedge against inflation. These upcoming announcements are expected to have a significant impact on the global crypto market, potentially driving up demand and prices as more countries signal their bullish stance on Bitcoin. For investors and policymakers alike, these developments underscore the growing recognition of Bitcoin as a legitimate and valuable asset class. The decision by Middle Eastern countries to invest in Bitcoin is not just about financial returns. It is also a strategic move to secure a foothold in the digital asset economy. The region's wealth, largely derived from oil and natural resources, has long been used to invest in various asset classes around the world. By adding Bitcoin to their holdings, these countries are positioning themselves to benefit from the ongoing digital transformation of the global economy. This strategy also reflects a broader recognition of the importance of diversification in national investment portfolios, particularly as the world moves towards a more digital and decentralized financial system. For these countries, Bitcoin represents not only a new asset class, but also an opportunity to play a leading role in the future of finance. As the announcements become public later this year, they are likely to trigger a wave of interest and investment in Bitcoin, further solidifying its status as a critical component of global financial markets. Conclusion. As the world of digital assets continues to evolve, staying informed is more important than ever. The developments discussed in this video highlight the growing significance of Bitcoin and other cryptocurrencies in the global financial landscape. For those looking to navigate this complex and rapidly changing environment, it is crucial to keep up with the latest news and insights. The speaker encourages viewers to subscribe to the channel to receive regular updates and analysis on topics that are often overlooked by mainstream media. By staying informed, viewers can better position themselves to take advantage of the opportunities presented by the digital asset revolution. The digital asset space is no longer a niche interest confined to a small group of tech enthusiasts and speculators. It is becoming a central part of the global financial system, with implications that reach far beyond the world of finance. As countries and governments around the world continue to explore and adopt digital assets, the landscape will continue to evolve in unpredictable ways. The speaker emphasizes the importance of staying engaged and informed, as the decisions made today will shape the future of the global economy. Whether you are an investor, a policymaker, or simply someone interested in the future of money, now is the time to pay attention and prepare for what lies ahead.